Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at the S&P. Now, the S&P is setting up very slow today. Slow on the S&P. Crude oil's going all over the place, and the S&P is just hanging out. Now, in terms of the S&P, we open up after yesterday's wedge that formed at the end of the day. Nice little wedge formation right inside there, and depending on how you draw it, it might also just be a channel. Now, if you drew it off the highs, you have more of a wedge. I don't really think there's a wrong answer here. Whether it's a channel or a wedge, both things kind of tell us the same thing, in that the buyers are trying to get this going up. Then we close and we open up this morning right here. So there is a small little gap inside here. And then we end the first candle as a doji. It's essentially showing indecision. This gap up will be seen as a breakout attempt from the buyers, so we need to see what they want to do from here. They follow it up with a strong bull candle, and they can't even trigger the buyers in, right? The sellers dump right back down again, and now the sellers look like they want to take control, but then the sellers lose their grip and it turns into a bull. You guessed it, that turns it into a range. So now we're looking at this in a range-bound scenario. We want to buy low, and we want to sell high, and we want to essentially assume that every breakout is a failure, and we want to go against them once we get the reason to get in. So in this situation here, we know that the buyers are trying to drive the market up. We also know that the buyers failed, so we need to be looking to buy somewhere down here. We don't want to be buying way the heck up here because it's a range. It's probably going to fail up there. So what do we get? Well, we get the buyers trying that first time up. Nice little move higher. It comes off the inside of that channel where the bears are likely to be seen. If anything, the buyers will be taking profit there. And the sellers close this as hyper weak bear candle. That is the exact opposite of what they want to see here for the sellers to begin taking over this move. So that gives us a clue that, hey, you know what? The sellers are completely falling apart here. They're not getting what they want, and that is a perfect reason to become a buyer. Either if you're aggressive, you can get in at the close of that, or above it. Either way, you're looking for a scalp to the upside. You're not looking for big moves right now, because remember, it's a range, right? This is a range environment. We're not looking for these massive, 2, 3, 4 to 1 type moves. You're looking for a 1 to 1, if that, on these quick little scalps. So you get a nice little scalp to the upside, and then we get up to where we're at the highs, right? We need to be looking to sell. We have this huge bull breakout bar. What's the continuation? Follow through as a doji. Really bad continuation into a strong bull candle, but then the bears completely engulf that bull candle, shutting down any hopes that the buyers had of getting that move going. And that is a perfect reason to sell it right back down to the range lows. Sell it down, we get to the range lows, and guess what? We cycle off the lows. You're looking to buy the range lows right back up again. Very, very range bound here so far. You just need to wait for a good reason to get into the move. And if you don't see them follow through, it's probably going to be a trap, and you'll probably be able to buy it low anyway to get the move going. So just a beautiful example of how to play these ranges back and forth. The one big thing that you need to keep in mind, this is a range day. Buy low, sell high. You're probably not going to get huge moves. Look for quick little scalps, and you'll do just fine on these types of days. So hopefully you learned something. Hopefully you found it interesting, and we will see you next time.